Welcome back to the channel. It's been a little while, so we have a lot to go over. Today we're going to do chart analysis. We're going to look at some targets that I'm looking at based on what we're seeing now in the charts. And we're going to go over the recent update from the Bitcoin Mining Council. So let's go over all these things today. Make sure you like, make sure you subscribe. It's going to be useful information for the rest of the week. I'm going to have another Bitcoin video coming out in probably about 3 days, and we're going to do an Ethereum and Eagle video soon as well. So make sure you like, make sure you subscribe, make sure you get the notifications when these videos come out so you can check them out. Follow me on Twitter and Twitch if you'd like. Links are in the description. Twitch streams will be coming back very soon, so just keep following and you'll get a notification when they're back. All right, so first thing that we're looking at is this large symmetrical triangle. This is the one that I created about a week ago. Now, this triangle, as you see, if you look at the date down here, it actually goes all the way out until like September the 10th, right? That's the day that it ends. The triangle still has a lot of time to complete if it continues this pattern. The first thing that we want to do is we want to look at slightly lower of a time frame in order to get an idea of what's going on in the short term. So what we're going to do is we're just going to add a trend line. We add this trend line in a couple of key areas. I'm going to zoom in so you can see it a bit better, but you'll notice that this trend line is hitting all of the local tops that we had in this trend moving down. So this is actually a descending line. And what you're doing now is you're putting in a triangle within the triangle. So you have a shorter one. This triangle ends July the 20th, about the end of the month. Now, to see what happens in the short term and whether or not we keep coming down and testing this line, we really need to know what's going to happen in the next day or two. The next 1 to 2 days are pretty crucial. These are daily candles. And what you'll see is we are trying to break this trend for the second time. We tried to break it once, we got resistance, and we came back down. And we got resistance on this other dashed line that you see, or this dotted line. That's our regression line. So if we zoom out, right, what you see are these we're on the log chart, and you see these regression lines in the log chart that are meant to give us trading channels. We are in this bottom channel now, and you'll see, now if we zoom back in again, you'll see that when we tried to break this trend line the last time, we hit resistance on the regression line, which is expected. Now we fell below the trend line once again. We're in this smaller triangle. Now we're trying to break out again. So the real key is, are we going to get support in the next day or two at around 34,800 roughly? That's where it is now if we were to hit that trend line. Coming back down and touching that trend line, so hitting like 34.5, 34.8, that's not a bad thing. But if we really want to see more price appreciation in the short term, what we want to see is no sustained moves below. We don't want to go back to the 32, 33 range, because once you do, then all these other areas are in play, right? Then you have 31,000 in play, and you even have 30,000 in play, which is where the bottom of this regression line is now. So keep that in mind right now. For the next couple of days, we're really looking to see, are we putting in support on this trend line? And this trend line right now sits at around 34.8. Okay, so 34,800 for the next 24 hours. If we stay above that, that's a great sign. If we drop below 34.8, then it's very likely that the price would come back down to anywhere between 32 and 34. So 32,000 should be a relative bottom at that point, because we have been putting in higher lows since we dropped down to around 28,000 about a week or two ago. Okay, so that's the very, very short term. Those are the numbers you want to look at. Now, if we're going to zoom out a little bit more, and we'll go into the weekly chart now, we start to see a slightly different picture. And let's get rid of the symmetrical triangle. What you see is most important here in this larger time frame on the weekly chart is really how long we stay in this trading channel. Now, we can do both things. We can stay above that triangle line that I showed you just a minute ago, right? Which is here, and we can stay in this trading channel, because all that really needs to happen on this log chart is that we trade sideways. Even if we stay at the same price, 35,000, well, then technically by tomorrow, or by next week, if we're still at 35K, right? Then this trend is moving down. The trend would be at around 34K at that point. But if we're at 35, we're still above the trend. So even if this moves slowly, seeing where we are in the next week, you start to see how important it is just to maintain the current price. The 35,000 level is a great level. And you'll see on these weekly charts, one thing that's very interesting is that all these candles have been bought up back to this roughly 35,000 level. So 35,000 is kind of a deciding level over the next few weeks. We want to see, are we going to break above that and we start to see these candles get bigger, right? We start to see candles coming back up towards the 40,000 line, which is basically where this triangle downtrend line is. So that's really the key to see how we're going to progress and when we're actually going to have a breakout. And it's very possible that that breakout may not be until the end of August. We may continue to go sideways at 35 to 40,000 and trade in this channel and just put in more volume here. That's a very big possibility. That's kind of what we've been seeing during this consolidation. What is very interesting is that the last time we were at this level, we did have a downtrend. And when we did have a downtrend, this was back in January, we had a downtrend. We saw the same thing. We saw the wicks getting bought up until eventually we just had a massive week of bullish candles taking us up. And I think that's what's going to happen again. We are going to see sideways trading until the supply is exhausted, the sell pressure supply is exhausted, and then I think we're going to see a massive move up because what will happen is supply and demand. I mean, as demand increases but the supply disappears, that's what you're going to expect. And we're kind of seeing little senses of that. If you go to, this is CryptoQuant, if we look at the net flow, I'm going to put this on full screen. So if you look at the net flow, this is very interesting. This is block level, so you're only looking at the last few days. But what's very interesting about this is that if we look at the last few days, let's say we go back to this area here, okay? This is about 35K, you can see on the left-hand side. This is roughly 35,000 where the top of this orange line is. And you'll see what happened after this is we had a lot of inflows. Everything above the zero level in blue are inflows of Bitcoin moving onto exchanges. So you'll see we went up to 35, there were massive inflows, and then we have massive outflows. So they were basically people putting money on putting Bitcoin on exchanges, they were selling, the price dropped, and then you saw huge outflows. Now, what we see happening is a pattern, right? We see a lot of outflows, we see a lot of inflows, we see a lot of outflows. And the price has been going down when there's a lot more inflow activity. So you see a bunch of inflow activity, price drops. Once again here, you see a huge inflow, price goes sideways. You see a pretty big inflow here, another big inflow here, and price was dropping. But what's interesting now over the last 24 hours is that the inflows have stopped. And as they've stopped, the price has started moving up. You're also seeing outflows have not been as massive. So basically, you're seeing less people putting Bitcoin onto exchanges. We know right now that the PWEL multiple, which is this value here, I've posted about this on Twitter. If you haven't seen it yet, you should check out some of my Twitter posts. But the PWEL multiple is basically giving us an indication of how profitable Bitcoin mining is. And you'll see we hit a key level down here of 0.44. The 0.44 level, if you go back the last 6 years, look at that yellow line. It served as a bottom for the PWEL multiple. The PWEL multiple is basically telling us that at this level, that's basically we're reaching a bottom for how profitable it is for miners to sell their Bitcoin. When the PWEL multiple's up here, that means miners selling Bitcoin are making a lot of profit. When the PWEL multiple is down here where it is now, that means that miners would not be making a big profit by selling their Bitcoin because their cost of expenditure is basically reducing their available profit or their net profit if they were to sell at these prices. So that's also indicative of a bottom because in the last 6 years, these levels have been bottoms. We've seen massive increases in PWEL multiple and price after these events. We have reached that bottom again and we've started to come back. Whether we'll come back and test it one more time, it's a possibility, but the fact of the matter is that we're at this bottom level tells me that we're very close, if not already in the process of recovering. So that's a very interesting fact. Make sure you keep that in mind. The net flows are showing us that as the price is moving up now, we are seeing less inflow of Bitcoin. Look here, you saw a pretty big 800 Bitcoin inflows. These were today. So one was midnight and the other one was probably around 2 a.m. or 1 a.m. we see these two huge inflows followed immediately by outflows, and the price went up. So even with inflow of Bitcoin now, the demand is exhausting the supply. So that's what looks to be happening. It's a very short time frame. Keep in mind, this is only 24 hours, right? These are a number of days previously, and you'll see just the difference in what we're seeing now. We're seeing price appreciation, and we're seeing far less inflows of Bitcoin onto exchanges. So very important fact there. So, okay, getting back to the symmetrical triangle, once again, like I said, sideways trading crucial for the next 2 weeks. That would be ideal. I would love to see Bitcoin stay at around 35K. Moving up is good too, but I don't want to see it too fast, because then it's just very possible that we will hit resistance at this 40K level and drop again. So sideways trading here would be good, and that'll put us above the current downtrend line, which if you go back to the daily, you can see that a lot better. That's what we were looking at before. So we want to break this downtrend line, and even if next week we are here, that is a decent break, then we can come back and test 33 and then keep moving up. So those are the levels I'm looking at right now. I think that our bottom level right now is going to be sitting at around 30K. I don't see us falling below that. If we do fall below 30K, then be prepared for more downside, likely back down to the $25,000 level if we were to drop below 30K now. There is also the possibility that we drop like to 30K, put in a candle slightly lower than this candle here. Let's zoom in a bit so you can see it better. So if we drop and put in a candle slightly lower than this one, we could keep moving up, and technically that's still a higher low. So keep that in mind. Right now, we are really looking at those key levels, 35,000 for where we are now. We want to stay at this level. We want to be above 34.8. And if we drop, we're looking at anywhere around 32,000. If we break 32, then we're looking closer to 29,800. Okay, so those are really the key levels. I think it's much more likely that we see sideways trading. We find support on the top of this line and we start breaking bullish, because right now we're at a point where net flow data is telling us that with Bitcoin going back up to 35K, nobody's wanting to sell. We don't see any Bitcoin moving onto exchanges, at least not yet. So we'll keep an eye on that. I'll have updates on that metric on my Twitter. Okay, the next thing that I want to talk about is some additional targets on a Fibonacci. So we're going to now get rid of the symmetrical triangle. We're going to turn on our exponential moving averages, and we are going to turn on our Fibonacci long term. Okay, so in this long term Fibonacci, you'll see that we are at a pretty crucial level. It's this green line here. Okay, if we scroll all the way to the left, you can see the price of that green line is sitting at, that's our 0.5 line, it's 34.5. So what does that tell us? Well, it tells us that this line has been a very strong line of support. You see this entire way, we hit support here. Now, even though we fell below it, we were bought back up above it, right? So that's our support channel. We fell below it once here. We didn't get bought up as quickly. When we went back up above it, we got support on it again. We got support on it here, fell through, and now it's flipped to resistance. So we hit resistance on this line once, we broke above it, fell below it, and now we are on it again. So we don't know yet, is it acting as resistance or is it acting as support? What I would love to see is it acting as support. So even if we have another dip and we go down to 34,500, I want us to stay at 34,500 and then keep moving up. So $1,000 drop right now, not a big deal, but what's important is that from 34.5, we do an uptrend. We don't drop below it, right? We don't want to drop to 34,000 and 33,000, because then we are seeing that, okay, we are still getting resistance on this green line. That's not a good sign. If we see that this green line, 34.5, turns into resistance and we drop below it, then it's very likely that we go down and touch the 30K level, maybe the 29,000 level, because that's where our regression line is. Okay, so very key for the next day or two. So it's kind of important that we did this video today, because I think it's going to be very interesting and important for you. So that is pretty much it for our primary analysis on Bitcoin. Those are the main things to look at. I'll show you just the moving averages and volume for the time being, because I think these are somewhat important as well. So the first thing that we notice with the moving averages, we're looking at the daily chart, and you'll see that in the daily chart, the 20 exponential moving average has now been essentially acting as resistance. We broke through it once, we fell below it again, we hit resistance on it again, fell below it, and now we are testing it one more time. So once again, 24 hours, very important, because we want to see, are we going to stay above the green line, and are we going to break above the 20 exponential moving average? If we do, if we break above this and we stay above the green line, then basically what you're looking at now is the next amount of resistance is going to be sitting at 38K. That's where our 50 exponential moving average is. That's where our regression line is. So essentially, I would expect something like this if we keep moving up, resistance here, and then back down, possibly hitting 34K as a support level, and then moving back up. Something of that nature. I mean, not on the daily time frame, but on a shorter time frame, that's what I'd be looking at. I'm showing you the daily candle, though, because that's where the moving average is. So I would expect that right now, if I'm looking to trade, what I would do is I would be buying anywhere between 34 and 35,000, and I would be looking to take some profit at around 38,000, because then I'm thinking it could dip back down to the 35, 36K level again. So that's if you're doing short-term trading and profit taking. That could be a potential strategy. Not financial advice, just my opinion. Those are the key levels that we're looking at. Another very important thing is our RSI. On the daily chart, our RSI is sitting at around 49 to 50, and that is a tremendous level. We don't really have enough information to know if we are having a bullish divergence on the RSI, but it's starting to look like we might. I mean, you can see the bearish trend all the way from here, right? That was the bearish trend. I'm going to put this in a brighter color so you can see it. Let's put it in yellow, and let's make it a solid line. So you see this solid line here on the RSI. This shows you that the RSI was in a bear pattern, right? Well, now if I take a look at this in a more micro pattern, it's actually trending up now, right? We didn't have this uptrend before, but now we've been seeing, you know, lower lows and higher highs. If we put in another higher high, then we're looking for RSI to go up to 57, price to go up anywhere from 36 to 37K. So keep that in mind. RSI is looking really good, and for the moment, it's looking like it might be breaking bullish. All right, so a bullish RSI break, a bullish divergence on the RSI is normally going to be met with price increase. So keep that in mind. We're going to have to see exactly how it plays out, but it's a good thing to see that this is occurring. Okay. Anything else? Okay, we never came back and touched the Fibonacci level. The Fibonacci level is still sitting at 27,200. This is the golden pocket in our long-term fib going all the way back to March 2020. We haven't come back and touched it. Great sign. I don't want us to see it touch there, but right now it's still slightly concerning overall. And the reason for that is if you just look at the larger trend, right? If you look at the larger trend, we are still in this downtrend. So the key, the biggest key right now is what I told you about the next 24 to 48 hours, right? That's the biggest key. Are we going to break above this trend line? All right, we've already broken above it, but are we going to hold it? Right? Are we going to hold it, and are we going to flip it as support? That's really the most important thing. You'll see on the 4-hour level, we are very close to that trend line. So we want to come back down. If we touch 34.8, that's fine, but then we want to keep moving. So keep an eye on that. That's what I'm going to be looking at. Let's move on to the Bitcoin Mining Council. This is pretty important. We're going to put this in a, I'm going to share the Bitcoin Mining Council. We're just going to look over their presentation. So if you don't know what the Bitcoin Mining Council is, a quick update on it. It's a voluntary and open forum of Bitcoin mining companies and other firms in the Bitcoin industry that are aiming to promote transparency. They want to share best practices with other miners, and they want to educate the public on the benefits of Bitcoin and Bitcoin mining. So that's really what the Mining Council is. This is a data review from the Mining Council for Q2 of 2021. So this was released July 1st, just a couple of days ago. We're going to take a look at some of it in it. So the first thing it tells you is the Bitcoin Mining Council is 23 mining companies representing 32% of the network. So this is only the companies that represent 32% of the Bitcoin network, all right, which is not huge, right? But it's important to see how 32% of the network relates to the remaining 70% of the network or 68% of the network, as well as all the data that they can bring and share with the rest of the network. I think what's going to end up happening is whatever strategies we see these 23 companies implementing for green energy, you'll likely see that slowly spread to the remaining 68% of the network. Okay, so let's move on to the next slide. The executive summary here says Bitcoin mining uses a negligible amount of energy, is rapidly becoming more efficient, and is powered by a higher mix of sustainable energy than any major country or industry. Let's keep moving. This is a presentation overview. I'm going to skip it. Let's keep going. So the first thing here, it says global Bitcoin mining energy use is negligible. So this is primary energy consumption of Bitcoin mining versus other countries in terawatt hours. Okay, so Bitcoin mining energy use is only 0.117% when compared to the world's total energy. So you see this here. The value that's representing this here is 189 for Bitcoin global mining, so global BTC mining. The world is using 162, 194 terawatt hours. And then you see in relation, broken down by countries, how low Bitcoin's terawatt hour usage is right now. It is not just negligible, it's barely represented here. So compared to the amount of energy we're using in the world, Bitcoin is using a tiny, tiny fraction of it, and its use cases are massive. All right, so let's keep moving. Then we see here, global Bitcoin mining has the highest sustainable energy mix. Primary energy sustainable power mix, Bitcoin mining versus countries, percentage of terawatt hour. So this is showing us that the BMC member data is the first one. That's the Bitcoin Mining Council members. So these are the companies that make up the Bitcoin Mining Council. They're using 67.6% energy mix of sustainable energy. That is a huge amount. The global Bitcoin mining is now up to 56%. So basically, you're seeing that a large portion of the Bitcoin network is already using sustainable energy. And then on top of that, you're seeing that the Bitcoin Mining Council is a very good percentage, a nice healthy 10.6% above, or not 10.6, sorry, 11.6% above the rest of the network as far as their sustainable energy mix. Move forward. This chart here shows you, it says Bitcoin mining energy use versus total global energy use. So what's very interesting are just a few things here, right? 162, 194, we saw this on the previous chart. This is the total energy generated worldwide. 50,000 terawatt hours are lost due to inefficiencies, okay? 189 terawatt hours are consumed by Bitcoin. We're losing more energy to inefficiencies by a massive long shot. I mean, look at the gray. This is energy lost. This is energy generated. And this tiny little sliver of a green line in between is the amount that Bitcoin uses. Global Bitcoin mining consumes 0.1% of the world's energy production. Insane. It also consumes 0.4% of the wasted energy. All right, then we see here Bitcoin mining energy use versus electricity generation use. So in the United States, every year we are generating 10,000 terawatt hours, 10,400 terawatt hours. Okay, out of that, 6,800 are lost. 65% of all energy used to generate and distribute electricity in the U.S. is lost or wasted. We're only using, once again, a tiny sliver, 189 terawatt hours. Global Bitcoin mining consumes 2.8% of the electrical system energy wasted or lost in the US. Okay, very, very crazy. Only 2.8% of what's wasted is what Bitcoin's using. Insanity. All right, let's keep moving. All right, we are on slide number 9. Okay, so this one here tells us the metrics of sustainable energy use. So the main thing that I want to show you here is hash rate. So we see that the hash rate has dropped significantly. That's how much the Bitcoin Mining Council is using. We see network efficiency at the same time has been increasing. So you would expect that as the hash rate starts picking up again and more mining nodes go online, because the Bitcoin difficulty has reduced significantly. I mean, if we take a look very quick at the Bitcoin difficulty chart, you'll see here that Bitcoin difficulty has took a massive drop. Now, this drop in Bitcoin difficulty is huge. I mean, we're talking about, a pretty insane drop looking at the totals. I mean, in reality, I guess this is the drop that we would be counting. You know, are we on log? What's going on here? Well, either way, these are huge drops that we're seeing. We're seeing, I can't gauge it on this chart because when I try to do that price range, it's giving it to me on the price, not on the hash rate drop. But anyways, it is a big drop in hash rate, or in difficulty. And if I'm not mistaken, I read some articles that said it's like 27%. That means that more mining gear is going to go online because now it's suddenly more profitable for miners. So we see this. We go back here and we see that hash rate drops, efficiency increases. We also see sustainable electricity has increased. From Q1, Bitcoin went from 36.8% sustainable electricity to now 56%. That's a rise of 52.2% in a quarter. That is insane. And if I'm not mistaken, Elon Musk said that when Bitcoin shows that it's using about 50% sustainable energy, he will turn back on Tesla accepting Bitcoin. I mean, we're getting there. We're getting pretty close. I mean, this might even be suitable enough for him. So we'll see how that works out. We'll go next. You see the sources and updates. The reason I wanted to show this to you is because there's a lot of good information here. And part of the problem is that people don't see this. So you see a lot of people these days talk about how Bitcoin's terrible for the environment. You know, it uses too much energy, blah, blah, blah. They don't read any of these things. They don't look at these types of reports. These types of reports have been around for a long time. Even though the Bitcoin Mining Council was just created and it's nice to see it consolidated, you could find this type of data online if you did your homework. And a lot of people did not, especially people in, in mass media. The main, media doesn't look into any of this. They just go with the FUD because that's what gets the most clicks. Remember, you're a product to them. You're not a consumer, you're a product. So if they can get you to click, they're making money. And usually 90% of the FUD is based off of that. Bitcoin has been dead so many times because of FUD. And when I say Bitcoin has been dead, just go to Google and type in Bitcoin is dead. It'll take you to a website where you can see all the times the media has claimed that Bitcoin is dead, and you'll see how the price reacted to that over a few months. It dips a little, and then it keeps moving because none of that FUD is going to stop the most powerful network on the planet. That's it for today. Hope you found this useful. Hope you enjoyed the Bitcoin mining data. We'll keep sharing those every quarter as they come out. Make sure you like and subscribe. Tomorrow we'll be doing Ethereum. We'll be looking a little bit more into what's happening, and I'll be watching these charts closely because I'll be honest with you, right? I've given you my targets of what I think is realistic in both scenarios, but for some reason I have this aching feeling that we are going to see a little bit of sideways trading for the rest of the day, and then by tomorrow we're going to shoot up and we're going to be trading at somewhere around 38,000. So that's what it's feeling like to me. It's looking like something like that might occur. I've seen these types of patterns on the charts before. After a significant downtrend, you start to see a massive uptrend because you got too undervalued. So I'm thinking that we could be hitting this regression line tomorrow at 38K. So let's keep it in mind. You know, not part of my overall TA because that's more speculation. I mean, all TA is speculation, but that's my speculation that I think by tomorrow we will be either touching or breaking 38,000. I could be wrong about it, which is why I didn't bring it up earlier. So let's keep an eye on it. We're not going to focus on that. We're going to focus right now on staying above 34.8. That's the main thing. As long as we can stay above this level, then we know that we are much less likely to come down and touch these levels. But once we drop below this trend line, then it's very, very possible that 31,000 are feasible, and I'll probably be putting in buy orders at 32K if we do drop below this. All right, that is about it. I hope you guys enjoyed. Make sure you like, make sure you subscribe, make sure you come back tomorrow for Ethereum and for eGold in the next couple of days. Like the video, look in the description for my Twitter account. Follow me there. I do a lot of TA updates there, and follow me on Twitch. I'll talk to you soon. Happy 4th of July. Peace.